After the Bitcoin price reached over $44,000, we've been stuck in a bit of a ranging market, with the price action being quite stagnant. In today's video, we're going to be jumping down into the technical analysis on the 1 hour, 1 day, and 1 week's timeframes, giving my thoughts and opinions on where I think Bitcoin is heading. So let's waste no more time. Let's jump right down into the video and kick things off with that 1 hour timeframe. Okay guys, so here we have Bitcoin paired up with USDT. We are on the 1 hour time frame and Binance is the data source. Now, as you can kind of see here, we breached up to this high at $44,488. And then we started to see a bit of a move to the downside. Now, what's interesting about this move to the downside is that we have this move coming down, we bounce up, and then we come down lower than this low over here at $43,444. Okay, and what's really interesting about this is that this move, this wick coming down here, basically indicates to us that we still have potential to come on down a little bit more. Now, it's possible that with this wick just here, it is possible that that is, the end of our structure and we can start to move on up. But we are essentially kind of trapped in this ranging market without confirmation. So as you can kind of see, if I draw this on, we have our A wave coming down, our B wave coming up, and our C wave could potentially just be this lobe down here. Okay, if I actually snap these to the wicks, it will look really, really sharp, like a sharp drop to the downside. Now, it's possible because we haven't breached that B wave high, which I'll go ahead and show you here, that essentially we are still in a three-wave correction even to this point here where we come up and then we've got to come back down and we come down lower than our wick, which was at the low of 43,335. So there's a few things that we have to kind of consider. I think for the most part, we can kind of consider ourselves stuck in a ranging market between these 2 points, between 43,335 and 44,297. And really what we're waiting for is we are waiting for a confirmation of a breakdown or a breakout to the upside. Okay, and until you get that confirmation, you kind of want to avoid gambling on the market. Ranging markets are very, very good at liquidating people who just are gambling essentially on whether price is going up or going down without a good strategy behind it. So we kind of want to wait until we get confirmation. Okay, so we can see here that we find ourselves on the 50 EMA and the 50 SMA as good levels of support, retesting these areas. We do have the ability to look at these as support ranges because they have been support for us in the past. And of course, our momentum indicator is indicating to us that we are oversold on the 1 hour and 4 hour time frames, basically indicating that support is likely to get found really, really soon. Again, that could indicate to us that we are likely to move up towards our target range from yesterday, this target range being the $44,470 to $45,142. That is our fifth wave movement. However, actually, if we're thinking about that and reflecting on that, we have to consider this actually going up slightly higher. So it would actually be this range just here between 44,764 and 45,215. And that is just because the wave 5 has to go and be measured against the wave 4. And in this case, we actually came down a little bit deeper. So in this particular example, we would actually have to consider that the deeper that wave 4 goes, the higher that wave 5 goes. Okay, and so here we can see that that target range is adjusted ever so slightly. So if we do find support here and we do not go down any lower than 43,335, my expectation is to have this move up into that fifth wave structure and complete the pattern just up there. And then, of course, once that occurs, then we talk about, what happens after. Now, it's possible that we overextend as we did within our fifth wave of a fifth wave already. Okay, so here we can see that this is a fifth wave movement that overextended with a 5-wave pattern, right? And it's possible that what we are finding ourselves with here is another structural point where we continue to see overextensions. It's possible that this fifth wave, for example, grows even more. It would be rare and it would be unusual, but this is a very unusual unusual time in the market for Bitcoin, specifically with Bitcoin spot ETFs and so much speculation on the market, we do have to consider that, unfortunately, we might see some overextensions which are irregular from what we would normally expect to see. Now, obviously, Elliott wave allows for these. It's a part of the rule structures of Elliott wave theory. And so what we're trying to do here is basically use the probabilities of the structures to kind of give us the outcome that we're looking for, or to give us an outcome that we can kind of utilize for trading purposes is probably the better way of articulating it. And so all we're trying to do here is basically say, okay, what is the probability of a move up, or what is the probability of the move down, and then go with whatever one has the highest probability. And so in my particular case here, I'm looking at this thinking there's a high probability of finishing this fifth wave higher before we have a higher probability of breaking on down. If we do exceed the higher range here, higher than 45,215, then that's going to indicate to me another overextension to the price action of Bitcoin, and will continue to push up a little bit higher. Okay, so understanding where you have to draw the line, where you have to kind of put your stop losses and things like that when structures change is very, very important in making sure that you stay as a profitable trader, right? It's not a bad thing to take the L if things do go sideways. It's about probabilities and having good risk reward ratio, that you're not just gambling needlessly on the market. And so when we take a look at this, we can see, okay, well, we have our fifth wave expectations, and if we were to kind of think about trading a short position here, then obviously we're going to want to kind of enter this short position somewhere around here with a stop loss above this area just there, and of course take profit can be quite deep actually, I think, in this particular case. So this allows you to snipe an entry, really good risk reward ratio, and obviously you could start off with really low leverage up on this higher range, right? Really low leverage, and as price comes down, you can increase your leverage and basically increase your margin as well. That will allow you to basically maximize your profits as you start to pull on down. Okay, don't just needlessly gamble way too much on the higher side just because you think that that's how people are doing it. It's not don't go 100x straight away. Go 2x, 5x, and then scale up as price goes in your favor. That will minimize your losses and all that kind of stuff should we continue to break on out to the upside. So on our 1 hour time frame, that's kind of currently where we sit. We kind of look for this move to the upside. Not much has changed there. Good support to be found here on the 50 SMA, 50 EMA. Oversold on the 1 hour and 4 hour time frames, all looking good. Take it to the daily, and again you can see that we are in the expanding diagonal. The fifth wave movement here is yet to complete. That's a fifth wave of a fifth wave. And of course, guys, I'll draw in just for the sake of the video. We are in the wave 5 of a wave 5 of a wave 5. You kind of see the idea here of what's going on. And so, yeah, so we are kind of nested in quite nicely. We're kind of pushed up into that higher range. It was a little unexpected. We are in the range of previous resistance, though. So I want to be a little bit cautious here. Quite tough to kind of get through this range. Which is probably why we're seeing a little bit of red right now before we have that last little blast to the top. On the daily time frame, expanding diagonal, obviously finishing or looking to finish up in this higher range. The first area of interest for me is going to be actually this little slither here, I guess, 39,600 to 40,000. After that, we're talking 35,000 to 37,000. After that, we are, of course, talking about 30 to 32,000. After that, and of course, we're really talking about coming down to the $24,000-$25,000 levels. These are all areas of support. Obviously, we can see that first range just here, this major fair value gap, is going to coincide with our lower trend line and also the 50 EMA, 50 SMAs. That's 35, 37K. So that's an area of interest. 200 EMA sits between here on the 30 to 32,000. So that's going to be another major area of interest to us. So if we do start to see a bit of a significant pull to the downside here, as expected, then, we've got two real key areas on the EMAs to kind of be thinking about and focusing in on before we kind of talk about those deeper retracements. But yeah, these are pretty comfortable levels. I'm not kind of too concerned with them. As fast as we moved up, we can move on down just as fast. We're overbought on that daily time frame, the weekly time frame, the monthly time frame. All that stuff is the same. Let's go ahead and check the divergences. No divergences here to be seen. Obviously, we had the hidden bullish divergence that we covered previously on the 21st of November. Here we can see we had great potential moves to the upside. I say potential moves, great moves to the upside of 24.49%, not 24,000, but 24.49%. 9%, structural points percentages to the upside there on that hidden bullish divergence. So it shows you to keep an eye on this because it does pay dividends, and we can see that on here. Volume profiles are low. If we zoom out far enough here, we can see on the Binance exchange here, volumes dropped right off a cliff from March 2023 to current. The volumes are very, very low. So what's really interesting about the volume profiling here is that we have new higher highs whilst volume continues to be non-existent here on the Binance chart. Now, is that just a Binance related thing? No, I do not believe it is. I believe if we go over and take a look at Bitstamp here, and we actually go ahead and throw the volumes on Bitstamp, and I change this over to reset the scale, that you can see here that even on Bitstamp, we can see that on the weekly scale, volumes are just non-existent, not in comparison to the bullish market that we found ourselves in during 2019 and 2020. Volumes are very, very low in comparison. Take this Bitstamp data into the daily time frame, and you can kind of zoom out just a fraction here. You can see that volumes are down lower than they were in November, and they are down lower than they were in March. They're down lower right now than they were in June. They are down lower, actually about the same as August, I guess, in October. But right now in December, volumes are significantly lower than all of them. Let me draw a trend line in to kind of just show you the scale of what this looks like. Okay, so this is your volume over time decreasing. Whilst your volume over time is decreasing, what is your price doing? It is getting a divergence. It's going in the opposite direction. This is quite an interesting thing. Now, there's no kind of rhythm and rhyme to this, but essentially, if you expect price to continue to push up higher, then we should be seeing an increase in the volume profiles when we see the trading activity, but we do not. And so this is quite an interesting one because everything in price action comes down to the supply and the demand, right? If you want to see price go up, the demand has to increase while supply decreases. Now, what we're really seeing here is the demand stays static, but the supply must be shrinking. It's the only other way that we can kind of articulate this. That essentially means that there's less Bitcoin on the exchanges now than what we saw previously. And if I actually go ahead and find my on-chain data, there we go. I don't like this data, but I'm going to show it to you guys anyway. And the reason I don't like it is I had to change the exchanges that I'm pulling information from. But in here, we can see in the last 365 days, we've seen 783,000 Bitcoin leave the exchanges. Now, I don't like the data because it does cross over multiple exchanges. So I'm going to take out Q1 of 2023 and just take a look at Q2, Q3, and Q4. And so in here, we can see the total inflows on Binance, Bitfinex, BitMEX, Bitstamp, Bittrex, Gemini, Huobi, Kraken, and Poloniex, as 6.6 million Bitcoin going on and 7.4 million coming off, right? So during this time period, we can see 758,000 Bitcoin coming away from the exchanges. And why is this important? Well, this is important because essentially what I'm talking about here is that we see, oh, that's the wrong button there. Let's bring that one back. We can see that essentially more Bitcoin is flowing away from the exchanges, thus shrinking the amount of supply that is available for sale. And as such, as demand is still low, we can see price moving up. So the only reason and the only rationale that I can think of as to why price moves up the way that it has been, whilst the volume profiles here have been decreasing, is that supply is static, supply is low, but demand is low, yet the supply is shrinking, and therefore you have this catalyst, this recipe for move to the upside. So then that pulls into question, why is that happening? Who is withdrawing the Bitcoin from the exchanges, and who is creating the supply-demand imbalance? I'll leave that to you guys to speculate and let me know in the comments below what you think is going on with that. Let's bring this back up into our weekly time frame, and what we'll do is we'll take that one off and throw this one on, I think, and get rid of that. We can see no more hidden bullish divergences, heavily overbought on the RSI on the weekly time frame, heavily overbought on the weekly stochastic RSIs. Essentially, we're testing the higher range of our parallel channel. This was an ascending wedge, but no longer an ascending wedge. I think this is more in line with a parallel channel. So we'll be looking to come down towards the low side, which will be coinciding with our 50 EMA, 50 SMA, and 200 EMA, as you can kind of see in here. 4 points of interest. We have 36, 37K. We have 30, 31K. 24, 26K, and 19.5 to 21,800. These are the points of reference that I find most interesting on the price chart and where I think price action is likely to want to gravitate back down towards. But guys, I think that is going to wrap up today's video. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.